in and get a personal loan from a bank, and he took his credit card balances down to zero. So he was over 50% before, and now he's down at zero. So he's well under that 30% debt utilization. So his credit score increased. Not only when he did that, he also created another account for himself, and he affected his mix. He affected it positively, his mix. Now, your mix is when you go ahead and have different types of accounts. So you have a mortgage, you have an auto loan, you have credit cards. That's your mix. He didn't have a personal loan before. So now he does have a personal loan, and that helped him with his mix. Now, doing just those two things affected 30 plus 10. So that's 40% of his overall credit score. They affected that by doing just that one transaction. What happened was within the next 45 to 60 days, his credit score jumped 60 to 80 points depending on the credit bureau. So it jumped from 60 to 80 points. Now, I don't know what John's credit score started out at, but let's just say he was at a 690. At 690, you have fair credit at 690. Now, he jumped from 690 to 750. Now, a 750 puts you in the excellent range. Now, John wasn't in the mood or need to do this, but let's say he wanted to refinance his mortgage. Now would be the perfect time for him to refinance his mortgage because he's at 750, which is excellent. 750 to 850 is excellent. He's there, and he would get the absolute best rates possible. The best rates because he's in the excellent range. So, and again, let me tell you this. So it doesn't matter. Once you hit the excellent range, doesn't matter if you're at the end of the excellent range, the very beginning, like at 750, 760, or if you're at 847, you're going to get the same rates as the person with the 847 is going to get the same rate as the person at 750. So when you get the excellent, you get the best one. So that would be a perfect time for John to do that. But I want to share that story with you because it goes to show you that if you navigate these waters right, then you can increase your credit scores, and you can do it relatively quickly. At least by that standard, you can do so. So I want to jump in and tell you that story. Now, we are past the halfway mark of the show, so I'm going to jump in and I'm going to do the question of the day right quick. So the question of the day comes from Sarah out of Arizona, and the question of the day is sponsored by Cute as a Cupcake, the cupcakery and bake shop, where the cupcakes are more than just cute, they're delicious. It's located at 2008 West 81st in Maryville, Indiana. Again, that's Cute as a Cupcake, cupcakery and bake shop at 2008 West 81st Street in Maryville, Indiana. Get by there and get you some cupcakes, you guys. So Sarah from Arizona, she asks, if I am an authorized user / signer on a credit card, am I financially obligated to pay? Now, this is an excellent question, and I'll tell you why. I have given out this advice to so many people and on these airwaves about becoming an authorized user. If you become an authorized user on someone else's credit card, it helps you boost your credit score. So if you're going to become an authorized user, what you want to do is you want to pick a card and a person that you trust, first of all, and you want to pick a card that has a high limit and a low balance, and a card that has been long standing. So this person has had this card for 7 years, 8, 10 years. That's going to be great for you and your credit score. You become an authorized user, that account goes onto your credit reports. So it goes onto your credit reports and it helps boost your score. Here is the answer to her question. No, you are not financially obligated. So let's say something goes wrong with this particular account. Or let's say, God forbid, this person happens to, say, pass away. And there's a balance on it. And typically, if you were a joint person on that account, meaning you both applied together and you received the card, then the person that's still with us is the person that would have to go ahead and make the payments on that account. As an authorized user, you are not financially obligated. It doesn't matter if that person files bankruptcy. It doesn't matter if they miss a payment or if they miss 10 payments or goes into collections or anything. You are not financially responsible. Now, what you want to do if something bad does go on is you want to get off of that credit card. You want to call them and say, I don't want to be an authorized user anymore, so it doesn't negatively affect you. Now, I have the feeling that it'll probably be too late at that point, that it probably will affect you, and you can kind of deal with that and dispute it maybe later on down the line. But no, you do not have to pay. You're not financially obligated. It's not like co-signing. So if you were a co-signer on this particular account or on a loan, like we spoke about John just a moment ago, if you were a co-signer, then yes, you would have to pay. It would negatively affect your credit score and you would be financially obligated, but not as an authorized user. So again, thank you very much, Sarah from Arizona. You are officially a part of the 800 Credit Score Man Show family. Thank you very much for submitting that question to me. So again, the question of the day is brought to you by Cute as a Cupcake, Cupcakery and Bake Shop, where the cupcakes are more than just delicious, more than just cute, they're delicious. 2008 West 81st in Maryville, Indiana. So let me give another shout out right quick before we move on. So I'm going to give a shout out to Lewis King. So my name is Kevin King, the 800 Credit Score Man, right? Lewis King, that's my uncle. So I want to give a happy birthday shout out to Lewis King as well. And while I'm here, let me shout out some Christmas babies. So I want to shout out Peter Bourne. Peter Bourne is one of my oldest friends. We lived next to each other when we were babies, and his birthday is actually on Christmas Day. Also, Anthony Boulware, I want to give him a shout out as well. Another Christmas baby. I want to shout out Dante Denson. Dante is my nephew. Yet another Christmas baby. I want to shout him out for sure. And then I also want to shout out, and you hear his name every show. You hear his name. I want to shout out Kobe, my oldest. Kobe is also a Christmas baby. So happy belated birthday to all of you guys. Happy belated birthday. And let's move on to the next question. So the next question says, how soon or near a big purchase should I check my credit report so I know it won't change? Now, this is a great question. And actually, if you've been listening, following along with the show, this question actually came from Brandon. We've talked about Brandon before on the show. He peppered me with a bunch of questions, and he has been featured as question of the day a couple of times. So this question came from Brandon, and it's a great question. And it's a great question because I actually can't answer it. I cannot answer this question. And here's why. To try to answer this question, or to try to, look at your credit report, see what your score is, and then, go somewhere and to make sure it won't change, it's kind of like trying to time the stock market. It's almost impossible to do. It's very difficult. Few people have ever done it. And so it's almost impossible to do. Plus, the score that you see may not exactly coincide with what the person or the creditor sees. So here's why that happens. Before, I've talked about car credit and mortgages and things of that nature. So there's different types. So if you're looking at your overall FICO score, your overall credit score, but you're going to apply for a vehicle, that score won't necessarily match what you see when the auto place go ahead and pulls a credit report on you. There is a such thing as car credit. We talked about it before. There is a such thing as car credit. I'll tell you, I purchased a car not too long ago, and the place that granted my loan for the car sent me what my score was. And I'll tell you, my auto FICO score is 795. Now, I've never been late on a car payment ever in my life, and I've had cars for years and years and years. I've never been late on one. It's at a 795. I assume they go to 850. I just don't know about that, but it's at a 795. So it goes to show you that there is differences. There are differences when it comes to the different buckets, and I've talked about these buckets before. There's a mortgage bucket, so that number that somebody pulls when you're applying for a mortgage may be totally different than when you go and apply for a credit card at a furniture store, or you go to Capital One to get a credit card. It's going to be different. So, very good question, Brandon. You stumped me, man. Thank you very much for submitting another question for us. So let's move on to another one. And I want to talk about this one. And we're coming down to the end of the show. We only have like 5 minutes left. So I did a show and talked a little bit about collections. And specifically within that show, I talked about medical collections. And I told you guys about this wonderful arrangement that the Attorney General out of New York paired with the different credit bureaus, talking about medical collections, and once you paid them, that they would come off of your credit report. Now, I asked you guys to try to help me out and verify this, because I have yet to have one client have it just automatically come off your credit report without disputing it and contacting the credit bureaus or the creditor, things like that. So what I decided to do was to call TransUnion myself and ask them the question. What's going on? I gave you guys the number before. The number to TransUnion happens to be 800-916-8800. That's 800-916-8800. I called that number. I spoke to someone, and I was not satisfied, actually disappointed with the answer that I received, and also the awareness of this agreement. I just wasn't satisfied with it. So I didn't get the answer that I was looking for. So I think I'm gonna say that I'm blessed and highly favored. I was able to chat with the director of public information for Experian over the entire United States, Mr. Rock Griffin. So when I chatted with him, I was able to ask him questions. And so from Experian and from Mr. Griffin himself, he told me this. He says that they don't necessarily come off of your credit report as if they never existed. But what will happen, of course, they'll show that the medical collection is paid if you pay it. They'll show that it's paid, so they'll show a zero balance, and they'll take that collection out of the calculation for your credit score. So in all intensive purposes, it's as if it never happened, because they're going to take that negative out of how they factored into your credit score. So if you have a medical collection and you pay your medical collection, now it's showing on your credit report as zero, then it's not going to affect you negatively anymore on your credit report. Now, medical collection agencies can decide or can go ahead and take it off of your credit report if they like, if they want to, if you ask them to, if they're going to be nice about it. They can take it totally off as if it never happened, but they're not obligated to do so. So I want to let you guys know that I was absolutely surprised to get the director of public information over the entire United States for Experian. But hey, things happen. And so, hey, now you are the benefit of that, me having that conversation with him. I also want to let you know, when I was speaking with him, we talked about the best way to increase your credit score. We talked about the best way to do that. And he basically said that it was a crapshoot. I'll tell you from my personal experience, and this came actually from a question from someone as well, that one of the best ways to increase your credit score is if you have a dormant old credit card that you haven't used, it's got a zero balance, and you've been trying to stay away from, getting into additional debt. A good way to do it is to increase your credit score is to actually use that credit card. I've given this example before. Use that credit card, buy dinner, buy lunch on that credit card, pay it off over the next couple of months. Yes, you will incur a little bit of interest, but pay it off over the next couple of months. Spend $60, $75 on it and pay it off over the next couple of months, and then you'll watch and see your credit score go ahead and soar as well. So I wanted to share that with you guys, because I was absolutely surprised that I was able to talk to this person, and it was a good thing for me and a good thing for you. So now I have a contact where I can go ahead and contact them if I have any additional questions as well. Another question that I had was, will checking my credit report hurt my credit score? No. If you check your own credit report, it will not hurt your credit score. Where your credit score gets hurt is when someone else checks your credit report when you're applying for credit. That's when it hurts your credit score. Also, let me throw this question in right now as well. How does How much does checking my credit score or inquiry drop my credit report? I've answered this 100 times, and it's anywhere from 2 to 6 points. Typically 2 to 3 points. It will affect your credit score negatively. And then one of the other things I was able to talk to Mr. Griffin about, I asked him, so what if a good account is not reporting to all of your credit bureaus? You have a good account, you want it to report to all 3 credit bureaus. And I specifically asked him because I was going through